Hey everyone, welcome to Bald Guy Money, coming to you from a hotel room this weekend, and I may have been the only gold and silver YouTuber saying to hold off on buying the silver breakout last week, but that's good news for all of my viewers because not only did we hold the $30 price level, strengthening silver's bull market breakout case, but at the same time we got a nice pullback, about 4% versus last week's closing price, which means anyone buying the confirmed breakout can stack more silver for the same amount of fiat currency, so win-win for silver stackers. And as a side note, I marked something on this chart for you all to see. It's a technical trading signal called a topping tail, and this isn't a textbook topping tail like we saw back in April when we tried to break above the $30 per ounce price level for the first time, but I would not be doing my job if I didn't point this out to you all and say there is still a chance for a temporary dip below $30 again before we start moving back up. So please keep that in mind because pullbacks in a bull market are perfectly normal. Nothing goes up in a straight line. Now, despite this pullback, the fundamentals for silver still look very, very good, and that's exactly what I want to talk about in this video, starting with the 3 reasons I am not ready to sell my silver into this rally. And before I get to this video's viewer question, which many of you will find interesting, I'm certain of that, so make sure you watch this video's viewer question today, I will tell you all exactly when and why I would sell my silver and what my plan is with my metals stack for the long term. Because I think many YouTubers focus so much on the bull case and the buy side for silver that the sell side often gets ignored, and I want to fix that in this video. Now, just before we get into it, if you're in the USA and want to buy gold or silver at a fantastic price from a dealer that you can trust, please check out channel partner Pimbex at pimbex.com to see the amazing assortment of metals they offer. What you see here on the screen is just a small sample of what they have. And for those of you who want to get some gold and silver in your IRA, even if it's just a little portion of your IRA, remember that Pimbex can help. Call them for a free consultation at the number on the screen to find out how. Just please tell them you came from the Bald Guy Money channel. Okay, now jumping into it, since the price of silver is now above $30 for the first time since 2012, I have heard a lot of people say they are cashing out. They are fed up with silver, and I get it. Because if you got into silver during the 2011 blow-off top, thinking it was the end of the financial system as we know it, and you were going to need silver dimes to buy a loaf of bread, then you would understandably be frustrated today and with how the silver market has developed over the last few years. And listen, if that's money, if you're looking to sell your silver, if that's money you need right now to keep up with the bills or buy groceries because the price of everything has gone up so much, then you're probably doing the right thing by selling it. I don't judge you. Because ultimately the purpose of stacking gold and silver is to use it in case you need it, and if you need it, there hasn't been a better time to use it since 2012 than now. But when it comes to me at least, I'm not selling. No chance of that happening right now. And the reason for that is I think we're only just getting a small taste of what's to come in this gold and silver bull market as we continue upward in this 20-year-long upward channel I've marked here on the graph. Because as I switch over to a table from the Silver Institute showing overall silver demand, you can see that where 1 billion ounces of annual demand was once something of a statistical anomaly, so not normal, out of the norm, we have been firmly above 1 billion ounces of annual demand for the last 4 years. It is becoming the norm now, including projections for 2024, and demand is rising. And with silver mine production remaining relatively flat over the past few years, not only driven by low incentives to increase production because of weakness in the silver price, but also because miners weren't getting the capital necessary to develop mining projects and increase output, this is starting to cause a minor issue in that demand for silver is greatly outstripping the supply. And with China's economy potentially waking up after a huge injection of stimulus from the government there, and yes, I know it's too early to confirm they are turning things around, but the writing is on the wall, because once things really start to pick up there, pressure on silver supply should only increase. And I want to be a holder of that, which is in high demand and undersupplied. Now, the second reason I am not a seller of silver at $30 per ounce is my concern about the debt, and we've talked about this in the past, but let me articulate this a little differently in this video. And I've brought up the US debt clock here for you all to look at, which, as you can clearly see, the debt in the United States is getting completely out of control, to the point that even many previously silent or complacent Americans are starting to voice their concern, and some cases, disgust with the situation. Because they fear, as many others fear, including foreign central banks holding a lot of US debt in reserve, that sometime in the not-so-distant future, even a small bump in the road is going to cause what happened here in 2008 and here in 2020, which is a massive and forced expansion in the Federal Reserve's balance sheet, aka also known as money printing, to bail out the government from a debt crisis, leaving real monetary assets like gold and silver to pump up as their prices adjust to new levels of inflation. And that ties in very well with my third point for this video, which is the guaranteed lowering of interest rates by the Federal Reserve of the United States, and other central banks around the world for that matter, despite the fact that we know the right thing for them to do is to raise interest rates if they are serious about fighting inflation. Now, why is it that I say the guaranteed lowering of interest rates? Well, apart from the fact that Jerome Powell himself has said interest rate increases are off the table, the US federal debt, which I just showed you, is so high that interest on that debt is now higher than what the US spends on national defense. And the USA isn't known as a country that saves money on national defense. So that gives you an idea of how high those interest rate payments are, and exactly how much motivation any president of the United States, the person who chooses the chairman of the Federal Reserve, has to install a person who will support low interest rate policies moving forward. And that's because they don't want to get crushed by the interest on the debt. And if we put any credence in how accurately the CME FedWatch Tool, which you see here on the screen, measures interest rate expectations, which I think we should take with a pinch of salt always, but it shows that by September of next year, we'll be 1 whole percentage point lower in interest rates than it is today. And if it's one thing I know for sure, the lower those rates go, the less attractive the US dollar becomes as a safe haven, which means the dollar will go down versus other currencies as well as other safe havens. And if we switch over to this chart showing performance of the US dollar on the DXY, which is the US dollar index, versus the price of gold in US dollars, you can clearly see here that there is an inverse correlation between the two, meaning as those interest rates go down, we will truly start to see the real upside in this bull market on metals reveal itself. And that is exactly why I am not selling my silver right now, or my gold for that matter. So the question is, when will I sell my silver? Well, the truth is I will never sell all of it. That's simply not an option. But with real estate prices softening and metals in a bull market, I am watching the relationship between those two physical asset classes very carefully, because once the gap between the two narrows to levels near what we saw in 2011 and 2012, I will know that is the time I should play the metals to real estate ratio, and that would also include selling my mining stocks to roll that money into real estate. Now, if rolling metals into real estate wasn't an option for me, when would I sell my silver then? And the answer to that question is the moment that I absolutely need the money and have no alternative source. Because as I see it, silver is only more and more in demand, all while fiat currencies, doesn't matter which fiat currency you use, it's all the fiat currencies around the world, are becoming less and less valuable in that they're buying you less and less things. So my goal is to avoid using the gold and silver and pass it to the next bald guy generation for them to do whatever it is they want with it. But you can be sure that before I step my foot into the grave, I will make sure they understand exactly why it is I took the effort to buy it and keep it and protect it and store it. And now I want to move to this video's viewer question. And please remember, I answer one viewer question in every video I do. Sometimes I make a whole video about the question, so please don't be afraid to leave your questions or recommendations in the comments section below, because you never know, I may just feature it in a future video. Now, this one comes from Rhonda Ludwig, and it's more of a comment than a question, and she said that she disagrees with my opinion on the USA returning to a gold standard, and I recently said that the chances of the USA going back to a gold standard are basically zero. And she also said that what I said about the dollar being the main currency, or rather reserve currency of the world, is far outdated because many countries are dumping the dollar. Now, I thank Rhonda for her comment. I even gave her a heart. You can see it here on the screen, because respectful disagreement is very important to me here on this channel. You're not obliged to agree with everything that I say here, and I do appreciate it when you let me know that you don't agree. And I have huge respect for Rhonda, not only for being brave enough to disagree with me in the comments, but also the fact that she was classy enough to do it in a respectful way. So Rhonda, you deserve a response right here in a video, and I'm going to give it to you. Because I get it, there are tons of YouTubers out there who are talking about BRICS and the end of the US dollar. I don't need to name those YouTubers, we all know who they are. And they're talking about massive dollar dumps. And listen, if you don't travel around the world regularly, I can see how you might focus solely on all of the worst of what they're saying. Because the fact is, there are massive elements of truth in some of these narratives that are circulating around on YouTube. But these trends are long-term. And the reality is that although many countries are starting to unwind their US dollar positions, I don't argue that, and I've talked about that many times right here on the channel, it's a very slow unwinding due to how dependent the world has become on the US dollar. Because when things go bad with a local currency in economically struggling countries, the locals always turn to two things. One of them is the US dollar, and the other is precious metals, usually gold and silver. That is a fact. And this example from Lebanon is just one of many that shows the true position of the dollar on the world financial stage. And even in Egypt, a newly minted BRICS member country, the dollar rules over their weakening local currency. Because as amazing as it may sound that trade in the Chinese yuan has gone up nearly 100%, I mean, that sounds really big, right? But Chinese yuan trade internationally is still only about 4.6% of total international trade settlement, which ranks it number 4 behind the euro, behind the British pound sterling, and behind, of course, the reigning champion, the US dollar. And I will say this, Rhonda, you are right that countries are doing less trade in US dollars than they used to. You are right that many countries want to get out of the US dollar. But where I would respectfully disagree with you is where you say the dollar as the main global currency is outdated information. Now, if we jump ahead 50 years from now, you may be right on that count too. I would probably bet on the fact that you would be right in 50 years from now. But in 2024, the US dollar still accounts for nearly half of all world trade settlements, and it gives the United States incredible power to impose sanctions and punish countries who do not bend to their will. And to think that anyone, any country which wields that kind of amazing power would willingly give that power up to move to a gold standard, even though it would be better for the people, is something I simply don't believe in. So Rhonda, thank you very much for your comment. I appreciate the way you gave your comment because, a lot of people come in the comments and they say pretty nasty things to me. But Rhonda, even though you disagreed with me, you kept it classy. Thank you very much for that. And with that said, everybody, that's it for this video. I want to thank you all for watching. Please remember to leave a like, share this video with your friends, and leave me a comment, leave me a question. Let me know what you think about this comment, about this video, I should say, not this comment, about this content. And until the next time we see each other, everybody, take care of yourselves and take care of each other. Goodbye.